The best way to survive a crypto winter is to hodl together on our Telegram group. Visit us on the Analysis in Chains Telegram.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams. Neil, how's life in Montreal?
It's doing good, surviving. Another.
Are you? There's a lot of blood on the floor.
Yeah. I would say crypto winter is still here. We talked about it last week. I would say that it's not been as bad. I think the last time we spoke, it was really bad. Looked like the end of the world. Things have stabilized, but to be honest with you, Nathan, I'm still a bit anxious. I think there's more pain to come. And
You think?
yeah. So when I go in and look at the different stats for the different blockchains, be it Ethereum Classic, Bitcoin, even Bitcoin Cash or Ethereum or anything that uses proof of work, and we're seeing a similar trend. And for some, it's been going on a while. Like Ethereum has seen its hash rate drop since mid-year. I believe it's the same for Monero as well. But I would say in the last week, we've seen what seems to be a lot of clearing out of old computers, or maybe some people have just given up. And we've seen hash rate drop a lot. We've seen difficulty drop a good bit as well, which can be a good thing because it can help stimulate some interest in terms of maybe doing some mining because the profitability is getting more interesting. But it seems that there's still more clearing out to be done, and it's not over yet. So until all of that is finished, until we sort of see a plateau, we could be in for more pain in the next few weeks.
So, what you mean, I guess, when we're talking about hash rate and difficulty, hash rate is basically the number of computers that are going on to try and mine each new block, right? And do you know how that works, Neil?
I do, but I think you're the real expert in the room here, so I'll
Yeah.
leave it to you.
Yeah, well, essentially, the way it works is that the Bitcoin blockchain is secure because it's a bunch of transactions, 4,000 transactions that are divided up into blocks, 4,000 transactions per block. And they want to make sure that they time the block so that a new block comes out every 10 minutes. This was done for a bunch of reasons, but basically it was seen that 10 minutes was about the balance that you would need between speed and security. So if you wait 10 minutes to confirm a block, then there's a very high chance that the majority of the nodes have the same block that is propagated properly. The more secure you want to be, the longer you take. But the thing is, the longer you take, the longer it takes for your transactions to be confirmed. So what they do is they set the difficulty of of mining the block to be proportional to how many computers or how much hash power there is to mining it. So, I mean, if you know how mining works, Neil, essentially you have the entire list of transactions, you add a mystery number, and then you're trying to find a hash code that starts with a certain number of zeros. And the only way to do that is to guess mystery numbers. So when they say hashing, they say guess a mystery number, put all of that data into a hashing algorithm, come out with a code, and see if it starts with the correct number of zeros. And then once you find it, you put it at the top of the next block. And the purpose of this basically is to slow the network down, to make sure that everyone has time to get on the same page to cryptographically secure the block so that it can't be changed. And the number of zeros that it has to start with determines how difficult it is. If you're trying to guess a random number so that when you hash it, your hash code starts with 10, it's much easier than if you're trying to start it with 3 zeros or 20 zeros, and because this is a 256 character code. And so the more specific you get, the more number of zeros you get, the harder it is to guess. And so essentially, when they talk about increasing the difficulty, all it means is adding a 0 to the end. So instead of 4 zeros, you find 5. Instead of 16, you find 17. And so this scales the difficulty with the number of computers. Because if you imagine, if you have a network of 10 computers all searching for a hash code that starts with 10, it won't take very long for them to find it. But if you have 1,000,000 computers all searching, whose sole purpose in life is for searching for these hash codes, and you only have 10, it'll find it much faster because there's just more computing power going into it. So that's what it means with the difficulty. The difficulty is reset every 2016 blocks, and they try to set the difficulty so that each block takes approximately 10 minutes. So it varies a little bit just because of the way that the randomness inherent in the system. But when we see the hash power drop, it means that people are not finding it profitable anymore in certain areas because of the electricity, because they can't sell the Bitcoin for a price where it makes sense. So they take their computers offline, or they will move them to a different cryptocurrency or something. But essentially, it's not worth the electricity. And so when the hash rate drops, then a delayed effect will be the hash difficulty eventually drops. So you end up seeing sort of the network compensate for the fewer number of computers. Does that sort of make sense?
It does. I mean, it makes perfect sense. And so where we are at now is that we're seeing both difficulty and hash rate drop for Bitcoin and many other proof of work blockchains. And so the real question is, when will that hit a floor? Because I think when it does hit a floor, that would mean the price has potentially hit a floor as well. And from there, we can start to see things start to build, because then people are feeling a lot more confident. Things seem to be more stable. We'll probably see a lot more, computers come online to do mining and stuff like this. So that's why I'm a bit anxious, is because I don't see a floor in difficulty or hash rate at the moment. And even if I look at sent addresses, it looks like, maybe it's because so many computers have been taken offline that the amount of active addresses sent in Bitcoin has plunged in only the last few days. So to me, that says there's a lot of sort of movement, clearing out, going on, a lot of purging of maybe old mining equipment or whatever. And until this purging is done, we'll start to see things potentially stabilize. So that's why I'm a bit, anxious, for this week and maybe for next week. But if you look at the bigger picture of things, if I was to compare, say, volume to 2 years ago, because if you compare it to this time last year, it was so euphoric and crazy. It's not probably the best reference, but if you look at in terms of trading volume compared to even 2 years ago, we're up nearly 5 times. So, and back then, Bitcoin was around about $1,000. So, I would say that it's very hard to imagine a world where it could drop below $1,000 when there's still so much activity in crypto. But it retesting like 3,500 or maybe even going to 3,000 is not impossible to imagine. So I think people just need to be brace themselves for potentially some turbulence. But I said this many times before. In a world of rising hash rate, when Bitcoin was going the opposite way, it didn't make sense. And so some sort of clearing out and purging had to be done, not just for Bitcoin, but all crypto. And I think we're going to have to see this play out before things start to look a bit more positive.
One thing I think that we should keep in mind as well, Neil, is that the Bitcoin is still relatively small compared to other assets and commodities. And therefore, it is vulnerable to market manipulation. I think all the big funds are looking at crypto. Most are saying that crypto is not going away. Bitcoin is the flagship, and we had predicted a rise in price uh, only a couple of months ago because so much activity was taking place on the OTC market. That hasn't really slowed down, and so I'm wondering if there's something going on. Like it could just be simply people that bet on Bitcoin early trying to take profits or to try and cut losses or to try and get their money into other assets. It could be a lack of confidence, but it also could be market manipulation.
Um, yes and no. I think the biggest challenge is determining what is value for cryptocurrencies. And the reason I say that is because if you have an idea of the way to calculate value, the way you would with bonds or stocks with dividend, or maybe even some stocks without dividend, it means that when things go a bit too high, people are more inclined to sell because they're thinking, okay, people are too enthusiastic. Now is time to cash in, take some profits. And same when it goes downward, and you see that a lot in the stock markets. There's a lot of these indicators when everyone knows, okay, we're going to see some selling now because everything is overvalued and everything sort of equalizes. But the problem with crypto is that the value's in the network, and the value's in network and people, but also be it developers, but also network value network in terms of computing power, because it's harder to attack it. It makes it more robust. And I think until people can really put a number on these things and give a good value, yeah, market manipulation will still potentially be there because, hey, if price goes up, people get excited, they want to buy more. That seems to be where it works. But I think we're going to need some advanced mechanisms for valuation. I think when that starts to creep in, then I think we should see things become more stable, and then institutional investors can come in, and if they can price things, then I think they'd be a lot more interested too. Because hey, like for sure, blockchain's only going one way. The more and more young people are getting involved. They're very enthusiastic about it. But I think people want to feel a bit more predictability and stability as well before they really go in, full force.
But why would we see rational reactions to a market when we could see conspiracy theories? Put on your tinfoil hat with me just for a moment, Neil, and let's just
Okay,
imagine what's going on.
I missed wearing my tinfoil hat, Nathan. It's been
Did
too
you
long.
imagine for a moment that you're a big fund? Imagine you're already invested in crypto. You've been buying up Bitcoin, but on the OTC market, right? So yeah, you have this giant pile of money, of crypto, of Bitcoin that's on the OTC market, so it never affected the price. And what you do is you come in and you sell it all at once. You dump, you put the price down. What happens? It goes through the 4,000 floor, the floor that everyone was saying it'll never go below this. This triggers a bunch of automated sell mechanisms, pushing it down to 350 or 3,500 rather. So now you've got an artificially low price and you start buying.
So you could say the same about the current stock markets. There's nothing stopping any fund from just cashing out and making everything go down. But then you're kind of playing chicken with the market. It's like, okay, I'm going to sell everything, and hopefully everything goes down when I sell, and then I'm going to buy when it goes down because everyone's got fear. But it's because of the reference points that people have, the calculations people have that kind of stops them from doing it. So it's why I feel that more understanding is required that kind of stops this sort of potential market manipulation from happening because people are more knowledgeable about valuations.
Yeah, but it's, like you said, there are certain stop gaps in the traditional stock market, including being able to value certain stocks and also the sheer size of it. Anyway, I'll take my tinfoil hat off for now.
Well, we'll see, Nathan. I'm going to put my tinfoil hat to one side, and And I'm betting it's not market manipulation. I'm betting it's just hash rate difficulty. But I'm confident that we're going to be talking less about market manipulation over the next few years.
I think you're probably right. It will go away. And even if it is market manipulation, I'll tell you what it shows. It shows that the big corporates and the big funds are still interested in crypto, in blockchain, and in Bitcoin. And so, I mean, I'm still hopeful for the future of the technology if that is the case.